Hello and welcome to today's Criterion Learning Series. Today we're going to be covering payroll year end for the United States. I do want to remind everybody we do have a chat and a Q&A. So if you do have any questions along the way, please keep them generic because I know there obviously could be very specific questions for your company and you probably don't want to share that with the audience. But if you do have generic questions, go ahead and post those in the chat or the Q&A. If there is something specific, you can reach out to support directly and we can answer those questions that are specific to your company. Before we move in, I do want to mention this disclaimer here that if you do have any questions regarding the taxability of incomes or deductions, we need you to please consult your accountant, your tax advisor, tax consultant. This would also apply to employees' situations with their taxes. So if you need to find out more information about that, we ask you to reach out to a third party. Criterion Support does not provide any tax advice. What we can do is set up the system based off of what you're told. So if they mention a deduction should be configured a certain way, we can help to configure that, but we are not going to provide that tax advice. And the information on the slides I'm going to show here in a few minutes are the latest that I have as of today and are subject to change from the IRS. So we ask that you just keep an eye on those things. Of course, again, you can reach out to your accountant, your tax advisor, or consultant if you have any questions on those. And I do want to mention we're not responsible for any typos. I did my best to put everything in here as far as the new limits are concerned. But if you do notice a typo, obviously, go directly to the source, the IRS, to get the correct information on this. But let's look at some of the retirement changes that are coming starting in January. So 401k, 403b, and most 457 plans, the new limit is 24,500. So that is available there. And so you can see that right there. You'll see the catch-up. Of course, now there's two different catch-ups that actually started in 2025, but you'll see the rates for next year is 8,000 for those folks who are between 50 and 59 by the end of the year of 2026. And then anybody who is 60 to 63 by the end of 2026, they have an additional 3,250. So just clarify that. Of course, the system is configured to handle those ages and appropriately, deduct up to those limits. All right, let's look at flexible savings, flexible spending accounts and health savings accounts. So FSA healthcare or medical, $3,400 is the new limit for that. FSA dependent care has not changed. It is still $5,000 for the year. And then health savings accounts or HSAs, of course, there are three different limits there. So if it is employee or self-only coverage, 4,400 is the limit for 2026. And then for family coverage, the limit is 8,750. And then, of course, there's a catch-up for HSA as well. That's $1,000 for those folks who are eligible for catch-up. All right. We did want to mention for overtime and how that is, I put it as deductions, overtime, reporting on the W-2 in box 12 code DD that actually starts for next year. So it does not need to be on the W-2 for this year, for 2025. But just to keep you aware, right now we have the code as TT. That's what the IRS has said it will be. Maybe that'll change by the end of next year or wanting to file or go through this whole process again in about 12 months. But for now, it is code TT, and the system will have that available for you to use that when it is time. All right, so let me go ahead and switch over to the system. We'll talk about a lot of the things that we might need to do within the system here to accommodate all these changes and so forth. So let me switch over to my browser. All right. So now this is another one of those situations, like many of the learning series, where you're not going to see a lot in self-service here because it's all configuration, it's processing and things like that. You will, of course, have the option to publish W-2s and tax documents to self-service. So the employee might see that over in their documents. They might get a notification that says your W-2 is available, something like that. So that would be available in their documents, and then go to the system folder and find the W-2s over there wherever you publish them out to. So let's go into the settings and we'll talk about some of those things. Actually, I do want to mention one thing in here. Employees can opt into receiving their W-2s electronically. I should have mentioned that here. So if I go down to my preferences here in self-service, so this is an individual employee setting, and they need to opt into this. It's not something you can just mass change your employees without them opting in, but they have this option under preferences right here that says paperless tax delivery or paperless delivery tax documents. When they check the box, they have this box that's going to pop up, basically agreeing to receive them electronically, might be by email, maybe in self-service, could be both, but agreeing to do that. And they can withdraw this at any time by unchecking the box, but this is how they would opt in. And that means that a paper copy of the form would not be printed for them. And obviously, you can handle the mailing of it, but the paper copy would not be printed. If they do want a paper copy, of course, they could just uncheck that. They could still receive them in self-service and an email, but a paper copy would be created for them. All right, now I can go over to the settings. So, of course, let's talk about where deduction changes would happen on the setup of deductions. That's going to be, of course, under deductions. All right. So here you can see as an example, a 401k. It's going to be very similar to, let's say, FSA or HSA, where I might need to go in here and put in the new limit for the year. Now, obviously, it's been a few years since I updated it, but let's put in the limit for 2026 of 24,500. Now, you do want to do this after your last payroll of 2025, simply because you don't want to over withhold anybody who's maybe at the limit today and you've maybe got one more payroll. You don't want to over withhold. So after your last payroll of the year, go ahead and do this for here. Now, you may have 401k set up to be in a pool. So you would need to do this to whichever one is the parent of of all these, because if you have several of them linked together, one of them is going to be the parent where you would put the limit in, and you wouldn't need to do that to all of them. I think I have a 401k. Yeah, as you can see, I've got like a catch up and a percent and so forth. So I could say in here they are pooling. You'll notice how it's already changed it in this one. All right. Now, of course, employer changes. Maybe you've got a new limit for your employer. Maybe you have a new match or something like that. That could be changed, in here. Again, I would say do it after the last payroll 25, so you don't exceed a limit for the previous year, or your match doesn't change, for existing employees for the last payroll of the year. So do these changes after the last payroll. And the same thing would apply to FSA. If you went into FSA, I know I saw it here, flexible spending account, and you put in, the limits in here. I think it was 3,400. Don't quote me on that one. I'd have to go back and look at my slideshow, but you put it in there, and then of course it would be there. These typically don't have a pool because you usually only need one deduction for FSA. You don't have like a percentage and a dollar amount, but you can see that there. Same type of thing with HSA and other types of plans that you have that have limits. So those are all, of course, the ones that are coming from the government. Now, you may have other deductions that have new limits for next year for, company policies, company deductions that may have a limit, or maybe there's some other benefit deduction that's not something like a 401k that does have a limit. Of course, you can update it in there. Let's just say this STD had a limit and I needed to change it. I would go in here and I would change it for the year. All right. So that's something I would do to other ones that are not like a compliance situation like 401k. The same type of thing could apply to incomes. So you may have one or more incomes where you have a change to the limits on the income. Let's say, as an example, I'll click on this bonus one. You may have a ceiling in here for one or more of these. You may have an annual ceiling of $10,000 or something, and next year it's going up. You'd want to change it here. And then, of course, do that after the last payroll of 25 so that you only have it going into 26 and going forward. All right, so that's where that would be configured. I do want to point out one of these things on here is the system labels, both on deductions and incomes. It's possible you may want something to show in a certain box on the W-2, like box 14. So going back to the deductions, let's just say you wanted this life insurance to show into box 14. You'd want to go to your system label and choose the box there. You would probably have the ones for box 14. I don't have it in my system here, but let's just say it was box 12. you would check that, and then it's going to show there. You don't need to do this for every thing. For example, 401k is going to automatically go to the right box. 457, 403b, those types of things are going to go to the right boxes with the right codes. But if there is something you want to show in that other box onto the W-2, you'll want to make sure the system label is configured there. It wouldn't hurt to say like box 12 in a 401k, but it's not necessary to do that. Um, and if you change it, even though it's now, December, if I were to change it today for box 14, it's still going to go back and look at the entire year. I don't have to worry about running some process to do some type of catch up of all those deductions that happened during the year. If I put the system label in today, it just means that go ahead and show everything of this for the year into box 14 as an example. All right, you don't need to do anything like for boxes 1, 3, and 5 for incomes. That's already taken care of in the setup of the form, so you don't need to worry about that. Just those special situations where you want it to be, let's say, in box 14. All right, so that's going to be your system labels there. I will point out there are other things that might change at the end of the year. As an example, you may have workers' comp rate changes. So if you're doing your workers' comps calculations in the system here, you may have new rates for next year. And so you could put those in here, and you'll see we do have an effective date. So I might come in here, click add, select the workers' comp code. Let's just say education. Maybe, I don't know why I said Steve there. Whatever state here, let's just say Arizona. And you may have a new contribution for that year. You would just put in 1126 as an example. And this is going to be the new rate for 2026, whatever I put into this one. Same type of thing. There may be a new limit, a new rate per 100, whatever, you can put those in there as you need to. All right. So now you can do there. And of course, you'll see these other ones. If you're no longer doing one, you may want to expire them. So that's an example of that there. Another place where this might come into play is minimum wage. So we don't have a system that automatically updates minimum wage. So if you had a new rate, let's say you can see here, like for New York City, here's my new rate for 2026. I would need to put this into the system if you're using the minimum wage calculation. So let's say San Diego had a new rate for 2026. I would need to come in here, click add, find the geocode for it. I happen to know a zip code in San Diego. All right. And then let's say it's now $20 an hour, effective 1/1/26. And so what this would mean, even though I'm doing it today, if I did have one more payroll, this is not one where I need to wait like I did with the deductions. It will continue using this rate up here. Let me just sort them. It would continue using this 2025 rate, 1725, through the end of the year. And then on 1/1, it would start using this $20 an hour. So if you are using the minimum wage, you'll want to make sure you update those as necessary. All right. And again, you may have other things. Perhaps you've got certified rate tables that are updating January 1st. Those could change, at any time, but certified rate tables, maybe January 1st. Commission plans, perhaps there's a new commission plan you have out there if you're using that. Maybe there's new shift rates or something like that. So you can update those types of things. I'm not going to go into every one of them. Just because they could happen doesn't mean I need to cover them. They might happen at other times during the year. All right. I do want to mention in HR, you might have things in HR that you need to do. For an example, you may have time off plans that are changing, benefits that are changing, and those types of things. So if you are going through your open enrollment, I know we're talking about taxes, but that does definitely have an effect on that. We've covered open enrollment and benefits in other training, but just know that you probably want to put those rates in. This is one of those ones where you can put them in early because we do have that effective date. It's not going to start withholding the deductions, even if I put it in today until it becomes effective, let's say on January 1st. So on the benefits, I might have changes in there. All right, so just some examples of places you may need to change things. Of course, there are things that you might need to change on employees themselves. Now, they can do some of these things like address changes in self-service if you've enabled them, but on any particular employee, you may have different deductions that are, effective. And these do, of course, have effective and expiration dates. So if they had some type of change that was effective, not like a 401k, but maybe a new deduction, or some type of change in the deduction. Again, you'll want to do that on those individuals. This is an area where you could import some data depending on what your situation is. So you can do that if you need to. Right. So that's, just add that deduction, maybe expire a deduction if you needed to. So whatever it is, let's just say it's this critical illness. If I was not attached to benefits and the new effective date is January 1st, put in, 1/1/26, the new contribution amount. And again, these do have effective and expiration dates. So even if I am doing it today and the deduction doesn't start until January or the change doesn't start until January, it's going to use this effective date to use that calculation there. Right. So those are deductions. And of course, there might be income changes, new pay rates for the employees, or new, let's say, flat amounts to get added to them. Maybe there's like a stipend that they're getting and it's changing in January. Again, we have effective dates, we have expiration dates. And so you could put those in ahead of time if you need to. Employees may submit new W-4s. And so you want them to do that. Those, again, have effective dates. That's something the employee could do through self-service if you've allowed them to change their W-4 or their tax filing for, the states. They may put those changes in, for you, and you go through the approval. Of course, you could do your own changes in here. These do have effective dates as well. So if I am doing this manually, I might say, okay, here's my new rate for 26, and whatever their situation is, single, and let's say 2000 for dependents, whatever that might be, and they can save that change in here. This is me doing it manually. Of course, the employee hopefully does that through self-service, but in reality, sometimes you do it manually. All right, so all those types of things you'll need to worry about, or at least think about as you're going through this year-end process in here. All right. Now, I do want to mention, we're going to look at W-2s and so forth. If somebody, you're in the middle of processing your W-2s and somebody comes in, hey, I had an address change. And yes, if you haven't sent out your W-2s, maybe you're still looking over reports and so forth, they could put that type of change in self-service, or you could enter in the address change in here and just regenerate the W-2 either for everybody or for that person, and it'll update the address on there. You don't need to go in and edit the W-2. You can just regenerate it with the new address if you had to do that. Same type of thing would be, let's say somebody's social security number is wrong or that type of thing. Let's say this person says, hey, that's not my social, and you need to fix that. They can go ahead and fix that in self-service, and it would update here. It would show on the W-2s. The only concern you might have with that is if there's any type of quarterly filing to a state or something like that that included the wrong social security number, you may need to go to that state and make corrections for that. There are several states where you report quarterly, and it includes employee information more than just like the 941, which doesn't include that employee information. And you need to have that there. You would want to go back and figure out what do you need to do for that particular state. Obviously, there's 50 states. I don't know every single state's requirements, but you can go back and fix those types of things. But if I have not already sent out the W-2s and I've not already filed, let's say with the government, everything up to the IRS, I can make that correction, or the employee can make that correction and get that approved, and then you could generate the W-2 with the right information. All right, so very simple to do that. Same thing if they had their name spelled wrong or something like that. So those are all things that you can correct on the W-2 just by regenerating them. All right, let's look at various reports you may want to run to verify things are correct. So I'm going to run basically payroll reports. There might be things you need to do for time off liabilities or whatever. That's not really in the context of this year end for payroll. So there are several reports you may want to run. We can recommend some reports, just depends on what you're looking for. If you're maybe reconciling the amounts that are in box 12, let's say for 401k, you may want to run different reports for deductions, whether it's deduction summary or deduction totals by employee, and run that for that particular 401k deduction. Of course, in here, if you have several companies, you could choose the company. Probably wouldn't want to do it for one individual pay date. You might want to do it for, let's say, the current year if you're running in December, or previous year if it's now January. You could, of course, type in a custom date range and put that in yourself if you want to type in the dates. But to make it easy, you could do something like that. You may choose one or more deductions here. Let's just choose all my 401ks. All right. And I don't know if I want to break it down any further than that, and just hit apply. Now, hopefully I have some 401ks. I don't remember processing any payrolls this year, so I do have one. All right, so Julie here, she's got $7,500 of 401k. So I can see this. Now, when I look at her W-2, I would expect to see $7,500 in 401ks in the box 12. So I can see that right there. So it gives you, a chance to look at this detail. This will be broken by deduction and then employees. So that way you can, see it that way. If you want to see it the other direction where it's employee and then each deduction, that's the deduction summary. That'll do basically the same thing. The difference is you'll see I can't select the particular deduction here. So I would see all deductions, which might get a little bit messy if you're only looking for 401k. You may need to export it to Excel and hide or delete the data you don't need. So depending on how you want to do it, this one is one I would probably recommend because you can just pick out the specific deductions you want. All right, same type of thing with incomes. Maybe there's something that is showing up in a box 12 for a particular income you have, or again, showing in box 14, or you just want to verify all the taxable incomes, you can run these reports here. All right, so you can see that in there and do your reports there. So very similar to these, you'll see even the same names. This one's going to be each income and the employees who have them. So again, I'll choose Iron Nest here. I'll do current year. Of course, if it was January, I would do previous year, or I could do a custom date range. And I could choose one or more incomes. If I was looking for something that's specifically going to show in box 14 or box 12, and I needed to select that particular one, I could select that. I'm just going to leave them all just so you can see what it looks like. All right, select whatever options I want. I probably don't want to break it down, but maybe I'm looking at W-2s by department, then in which case I may want to break it down into departments by, individually, but I'll go ahead and run this here. All right, mine is very simple. I only have two, but you'll see here each income code with the employees who have it. So I've got regular, I've got retro, and you'll see those broken down for each person that's out there. You'll see the gross over on this side, but really I'm concerned about the year-to-date amounts over here. And so let's just say this was going to be in a box 14. Could check, and did Chris get whatever the code or whatever that number is showing in box 14, or a box 12 if you have a specific income that goes over there. All right, so good idea to check that information. And of course, there are tax reports that show this information as well. So very similar, we got taxable wages by employee. This is taxable wages by tax code, very similar to this. And then we have totals. So just to show you, again, what this might look like. Current year, I could break it down if I want to, again, break it down by a certain grouping and so forth. I'm just going to do this. All right, so each tax is a separate page. Here you see Arizona. There are the three employees. So that way, if I'm looking at the W-2s, I can see, is it showing correctly for my unemployment in Arizona here? And then I go down to the next page. Here's my Arizona withholding taxes. So there's my subject wages and any withholding that's over here. And I go down, federal, FUTA, Medicare employee, Medicare employer, and then Social Security employee, Social Security employer. All right, so I can check all those things out, make sure it's showing correctly in boxes 1, 3, and 5. And of course, down at the bottom where the state taxes are, if you have taxable, withholdings down there, you would be able to see that on the bottom. I figure it was a box 16, something like that at the bottom of the W-2. All right, and then if I do want to see the totals, maybe I don't care about the employee details because now I'm looking at the W-3, I might say, oh, okay, let's run this for the current or previous year. And this is going to give me the totals for each tax code. So regardless of the individual employees, it's going to give me those totals here. So I can see there's the total taxable wages, the total withheld or employer, and I can see those numbers right here. All right, so very easy to see this. I've got one state. If you had several states, of course, it's a little bit longer of a report, but you can see all that information there. And you may want to, narrow it down if you have like certain states, you've got several of them, you may want to run it for different states individually. All right, now let's talk about the W-2s and getting those out to the employees. The first thing I want to talk about is if you want to publish them to self-service or email them to the employees, you can deliver them that way. So you'll see down here under the system configuration, we have document delivery. And here you can see document delivery. And I've got actually three of them set up here because I have different things like my ACA files. Here's my W-2s, and you can add other ones in here, but I'm going to click on the W-2. If you don't have one, of course, you click add. Now, if you do want to save it and publish it out into self-service, you'll need to create a folder, and I'll show you where that is in a moment. But here you'll see, as I set up, what is it I'm going to call it? You can call it anything you want. Maybe want to call it, year-end taxes or something. Whatever the name is, it doesn't matter there. What matters is which report you're doing. So you can see like, oh, when you're doing 1099s, so you might select one of those. Here's W-2. So you can see which report. I, of course, want it to be active if I want to use it. Here, I could tell the system, use their personal email address if they've given it to us. So if they have a personal and a work one, let's go to the personal one first. If they don't have one, we'll just go to the work one. If you uncheck this, it's always going to go to that first one, the primary email address. All right, so that's what that is right there. Here's how I want to do it. So I can do post in ESS, which would be, in self-service, or send by email, or both. So just like that. All right, and you have to choose one. I can't leave this blank. Now the path down here, I'll talk in a moment about where this is. But if I do choose post in ESS, I have to put the path because it won't know where to go. So this is something I would need to configure first. Let me just save that right there, so you can see where that is right there. So the documents, the location of those is going to be up in here. You'll see under general, we have documents right here. You would need to create the folder where you want them to land. As you can see, I have one here called W-2, but this is how you add it. You just click add. Oops, I'm sorry, add folder. Click here, add folder. And then what do you want to call the folder? Maybe you call it tax forms. Well, I've got one called tax documents, but you might call it W-2s without the dash or whatever. You could actually make one for each year if you wanted to, or it will like collate them into different years as you go through and use this. So if this is the first year, it would have the 2025, and then next year 2026 and so forth. But you could create different folders. You would just need to remember to go back into the delivery and change the folder before you generated the forms. And here you'll see as I go in, I've done this a couple of times so I can see the ones for the previous years. If for whatever reason I wanted to delete them, I could do that. So I could just hit the delete right there, and it would delete those older ones. And you'll see those out there. All right. So now these other things are other documents that might be visible to employees in self-service. That's not the same as the W-2. Maybe you've got like your handbook or company policies or something as documents. Maybe you've got some material data sheets as documents. That's where the company documents are. All right, now let's talk about the actual running of this and how we get them out there. I've already created them, but it didn't take more than a few seconds here. So under tax filing, you'll see W-2s. All right, now I have other things in here for Canada and so forth, so you can ignore like T4 and UK is like P32 and so forth. I'm going to look at W-2 and W-3. All right, so here's W-2. And of course, you have multiple employers. You may want to do them together, but I'm going to do it separately. Maybe you already have pre-printed forms. That's great. If not, you don't need to check that box. Of course, what employee? Now, this is where, again, if I need to redo it for one employee because of whatever the situation is, I can select that employee. Maybe their address is wrong. All right, I'm going to leave that blank and just choose the year. All right, and here, if I wanted to sort it in a certain way, I could do that, either last name or social. All right, I'm just going to hit apply here. It'll just take a couple moments because I only had a few employees. And here are my W-2s. Now, how do I publish them? Right up here with this delivery. So you'll see here, publish the paperless one. So anybody who who has that checked, it's going to publish those to them. And then anybody who doesn't have that box checked, I talked about earlier, the paper one's going to go out. So that would be the delivery right here of those two options. But of course, I might want to review these things and double check the numbers against those other reports. Of course, I could just download them. I don't need to do the delivery. This is not necessarily the final version. If I'm still doing a comparison, I could just download or print them and look at them outside of the system. And then maybe I need to go and make corrections. Right? Very similar with the W-3, except for this one, you don't deliver to the employees because they don't need to see it. So I would choose the year and I would hit apply. All right, now it's going to show me my W-3, and this is again where I may go to those totals reports and look at these numbers and verify everything is correct. All right. So that is very quickly at a high level the tax filing, the printing of the reports, the changes you may need to make throughout the year. Now, if you are using something like CTS or Atrix, you can go through government reports, for example, to get to Atrix and do your W-2s. So might come over here, choose federal and do W-2s. You can still run the reports out of here to look at them before you even get to Atrix. They're going to match because it's reading all the same data. But if you want to look at them before you get to Atrix, you can do that. Same type of thing like with using the CTS tax filing. You may want to run the W-2s out of the system, maybe even after your last payroll of the year, just to verify everything is right before the tax filing is sent to you to verify. So you have lots of options to do that. You can use them internally and get that information out. All right, so let's go ahead and talk about our last training class of the year. It's not the last training class ever, but it's the last training class of the year. It's the only one I have on my slideshow presentation here. So let me share this right here. So probably not of interest to most people here because you're not in Canada. But if you're interested in what Canadians have to go through, the forms they're doing, you saw the names and some of them, very similar to what we do here in the States. So if you're interested, in a couple of weeks, we're going to be talking to our Canadian friends and how they do year end. We will have training announced for January. We just haven't put the calendar together yet. So it'll be in the first full week of January. We'll have some training out there. I think we're going to cover some HR topics. But I do want to thank you all for joining us today. I do want to point out, I didn't have the email address on here, but if you do have any questions, I didn't see anything in the chat, but maybe my colleagues over there did answer questions. But if you do have any other questions, please reach out to us, help@criterionhcm.com. We're here to help you out. We know that it can be stressful for the year end, and we want to help to relieve that as much as we can to make it a little bit easier for you. So thank you again for joining us. I hope to see you all again in a few weeks.